Hey everybody, hope everyone's doing well. I'm just making this video because I cannot make a review later today. I have things going on. But I wanted to share a little bit about what it is that I'm working on behind the scenes. And basically, I'm just working on a system that revolves around breakouts and trend resumption. So what's the concept of a system that revolves around breakouts? You have to understand breakouts. You have to understand the fractal nature of markets, how markets move, and the fundamentals of that repeating fractal pattern. And let's just think about it. Somebody said to you, the E-mini had a bull breakout today. It's almost meaningless because, of course, there was a bull breakout today. There's probably 40 of them. It's just meaningless to say there's a breakout. What's the context? Breakout of what? And the list goes on and on about the questions you could ask about the breakout. Was it a 1-bar breakout? Was it a 4-bar breakout? Was there a micro gap? Were the bars uniform in size? Was it leg 3? You can ask a series of questions. So there's a lot that goes into it. So saying there's a breakout is not enough information, so we need to go deeper. But that's not what this video is about. So the concept of breakouts and what this system is revolving around, my job as a trader is to capture second legs after a breakout. As funny as it sounds, the best way that I've thought of explaining what it is that I do, and let me back up. You've heard Al talk about the market is basically a collection of institutions. The institutions make up the bulk of the volume traded, the vast majority, maybe 90% of the volume that's traded is big institutions. So the market is basically a collection of institutions. Our job as retail traders is to piggyback on the moves from the institutions and to do what the institutions are doing. So this is what I was going to say. It's kind of a ridiculous association, but the best way that I've thought of putting it for myself, I don't know how many people are a fan of Eminem, but he has a song called When the Music Stops. And there's a line in that song where he says, if there ain't stuff for me to feed off, I'm seesaw battling. And I interpret that as, you need something to feed off. You need a trend to follow. You need the institutions to do something for you to piggyback on. The way Ali puts it, you need an event and then a response. Or it's the law of cause and effect. You need AB to look to capture CD. You need leg 1 or you need some sort of breakout to piggyback on, capture the second leg. And otherwise, you're seesaw battling. And to that, I think a seesaw is up and down. Up and down, to me, in trading is a trading range, 50-50. Not ideal. So the whole point is, in the bull case, recognize AB, buy the pullback, capture CD. In the bear case, recognize AB, sell the pullback, capture CD. And then management, that's not an exhaustive list. This is very brief, but of course, when your probability is high, you're going to press your position. You reduce your position when your risk gets too big or your probability weakens. And just be quick to exit when you're disappointed. So everybody wants this. AB, pullback, symmetrical, second leg, CD. But a lot of the time, you get something more like this. Let's say you buy the close of B. You bought the high tick. Then there's a pullback. You're disappointed. You scale in lower. You look to exit at your original entry. And then the market has to go lower to find buyers. But now at this point, maybe you're low in a trading range, or maybe it's a double bottom bull flag, and you look to add to your position again here, and then you capture the second leg. A main point I want to focus on in this video is that markets are fractal. It does not matter what time frame or what instrument you're looking at. It doesn't matter if it's a 5-minute chart of the E-mini or if it's a daily chart of Apple. All the charts are going to look the same. If you take the labels off, you take the price axis, the price label off, and the time, you can never tell the difference between a 15-minute chart of Amazon and a daily chart of the S&P 500. They all operate the same way. And that gets kind of deep. The whole point is that markets reflect rational human behavior. And they take on this fractal pattern that, and this always bugged me too. Al talks about it in the intro of the books. He says, and I'm going to probably butcher this, but he says something like, why do the patterns look the way they do? And he says, because that is the way they look when you have an, infinite number of very smart traders taking an infinite number of trades for unknowable reasons, but they're all based on sound logic. And so basically he said, the patterns look the way they do because that's the way they look. And I was never satisfied with that answer, but that's basically as deep as it goes. Charts reflect rational human behavior, and this is just the way it looks. And that pattern is A, B, C, D, leg 1, leg 2. Call it what you want. But it's also interesting. I always, I can't help but compare things to trading and to charts. And so you just look at the trees, look outside, look at a tree. And that's a great example of a fractal pattern. You got the trunk, and it splits off into smaller branches, but those smaller branches can be pretty thick themselves. They're almost like mini trunks, and those mini trunks subdivide into even smaller trunks. At a certain point, you stop calling it a trunk, and you call it a branch, or a limb, or a twig, whatever it is. And that also gets into I think this is a common question, or something that's hard to grasp at first. How is it that Al calls a trend bar, a breakout, a gap, and a climax? How can it be, all the same thing? And I understand how that is confusing and doesn't make sense. But think of it this way. There's the tree example I just gave, and I can give another example. Think about water. And what is water? Break it down to the molecules. It's H2O. And it doesn't matter if the H2O is frozen, solid, or liquid, or gas. It doesn't matter the state of vibration that it's in. It's H2O. And so if it's frozen solid, you call it ice, or maybe you call it snow. If it's liquid, you call it water. You heat it up, it starts to form vapor or gas, and then it's air. But we're talking about H2O all the way down. So that's kind of the way I think about how a trend bar can be a breakout, a gap, and a climax. But anyway, I'm getting sidetracked. This is kind of just a spontaneous video, just sharing some thoughts. So I have this chart here, and it's a pretty good example of what I'm showing, almost a textbook example. A, B, C, D. But look at the pullback. You'll notice the pullback itself has two legs: A, B, C, D. And if you want to get really deep, the pullback of the pullback: A, B, C, D. So I kind of drew lines on here, almost like a line chart, to demonstrate what it is that I'm talking about. And I'll go ahead and remove the chart so we can see it better. And I'll explain this in a moment, but you can see how complex it is. These are really just drawn on points on this chart. When I remove the chart, all of a sudden, you can really see, wow, leg one, leg two. But in between leg one and leg two, there's a leg one, leg two. In between the leg one, leg two, there's a leg one, leg two within this one. So you see that pattern go infinitely deep. And I'll explain the text on the left. But I think it's worth, just think about what it is that I'm talking about. It's worth thinking about and just really spending time doing nothing but really thinking about it. And the reason I have this question, what is that pause between breaths? I practice yoga, and the guy that I watch for yoga and meditation, he frequently says, focus on that pause between your breath. And think about when you breathe. There's the inhale and the exhale. It's up and down. And there's the expansion of your lungs, contraction of your lungs. And, again, it just goes infinitely deep. You start to see these same patterns reflected in everything in the universe. Even we as humans are fractal. But anyway, I'll stay on track here. The point is, what is that pause in between breakouts? And what's that pause in momentum? It's really curious. Why do we rally to here and then suddenly stop? And then why do we sell off to here and then stop? And then if you want to get deep, to here, here, all the way. And I'll talk about this here, how it relates to this. Let me back up. What's happening up here? There's something going on when the momentum dries up. Traders conclude, okay, I'm no longer going to buy up here. I'm going to buy a pullback. So the bulls stop buying, the bears are selling, and the market has to go lower to find buyers, and the bears make a scalp. Then the bulls come back in, but they're disappointed from up here. So we rally, but then we sell off again. And then here, it happens again. Pause in momentum, a shift, and then we reverse back up. What's happening within those pauses? And that happens over and over and over again. And this is what Ali calls the secret handshake. There's like traders have a secret handshake where, the best example, maybe here, the bulls buy, they're hoping for a surprise, but the reality is the bears are going to get a second leg down before there's a real trend resumption attempt for the bulls. So the bulls buy here, taking a chance, but after they see a pullback, they scalp out. So the bulls start selling. The bears are always selling. Traders are in agreement. We have to go lower. And then the same thing happens here. At some point, we find a support level where the bears have gone far enough. They're buying back shorts, taking profits. The bulls see value in buying, so everybody's buying, and we rally. So it's this part right here that always tripped me up, and it's because of this. There has to be a trader on the opposite side of your trade. And the reason that tripped me up is because you have to respect that other trader. There's an institutional trader taking the opposite side of your trade every time you take a trade. You have to respect that. And that would really, again, it would trip me up. But the more I've thought about it, I'm thinking, okay, yes, there's an opposite trader taking the other side of my trade. However, that doesn't mean they're looking at the same 5-minute chart that I'm looking at. And as a matter of fact, I'll go back to the fact that institutions make up the market, and they're trading such large volume that I'm invisible in the market. And to add to that, they're trading such large volume that a lot of them are not trading intraday. They're not day trading. They're managing billions of dollars, and some of them aren't even looking at charts. But if they are looking at charts, the reality is they're looking at bigger time frame charts. They're looking at the daily chart or the weekly chart or maybe even the monthly chart. So, yes, when I'm buying, someone else is selling. And that, again, what would trip me up is how on earth could a smart institutional bear be selling down here after such a strong rally and 2 legs down, and now we're below the swing point? Like, who on earth is selling here? And so I doubt myself for wanting to buy because there's a smart institutional bear selling here. What I've learned listening to Brad and listening to Ali is that it almost sounds like these big institutions that manage billions of dollars, they don't care about precision as much as intraday price action day traders do. So by that, I mean they might buy the high tick up here, use a very wide stop, scale in lower, and they're probably going to make money. And the same applies here. Some bear sells here using an incredibly wide stop. And if we think about the market cycle, we have a spike, pullback, and we're channeling. The odds are this channel will evolve into a trading range. So a trader who sells down here, uses a wide stop, scales in higher, the odds are they can at least avoid a loss, if not make a profit by exiting at their original entry price. So again, this was kind of a spontaneous, unstructured video, just sharing some thoughts that I thought were interesting. So I hope you liked this video. And again, no review today. That's why I'm doing this. But thanks everybody for watching. And I hope everyone has a good day.